back with another stock analysis. Today we will be looking at Rocket Lab. They are a orbital launch company as well as just a space company in general. They do a lot of government contracts and things like that. So they just released their earnings about a week and a half ago. From what I saw from their stock price, it was fairly mixed, but we're going to get into that today. We're going to do a financial analysis of the company as a whole and just take a general look at how things have been going recently. So if you're interested, make sure to subscribe. I make these videos just about every day of the week, and let's get into Rocket Lab. So looking into Rocket Lab here, aerospace company, launch services and space systems. So everything I already said. Industry metrics, we have a backlog value, which is essentially just the value of their contracts that will be upcoming in the future. From what I understand, I believe that's what that means. But anyways, $8.5 billion company, which is pretty surprising considering I don't think they have any kind of positive revenue or metrics at all yet, but pretty interesting. Target price is at 25, 14% long-term growth rate. Right now we're at $18 a share, so they are expected to go even higher. If we look at the chart here, you can see they have been down for years, and just in the past 3 or 4 months, they have seen a huge run up going all the way down to $3 a share, and now they're at 18, so pretty solid growth there over the past couple months. If we look at the growth summary, fairly mixed, but in the 3-year estimates, we are seeing a bit of positivity, which is pretty good. Cash flow is a little bit low, and we do have some negatives here short term, but overall, I would say that sales growth speaks for itself, where there's definitely a lot of positive growth expected for the company, and that will kind of translate to everyone else as it continues forward. So saying that, let's get into some of the earnings. So this is their most recent report. Their revenue for space systems missed slightly. Their launch revenue beat. Margins came in about 2% above estimates, and EBITDA margin came in about 4% better from estimates. Expenses came in across the board below, which is pretty good, and their backlog is slightly over $1 billion now. So saying that, let's get into some of the specifics of this earnings report. So record revenue, 26% growth quarter over quarter, and 78% growth annually for last year, and also just for their fourth quarter, 121% year over year growth for their fourth quarters, which is pretty crazy. So highest ever annual revenue of $436 million, and highest quarter four revenue ever of $132 million. Almost a 400% increase from 2021, which is pretty crazy. That is from when they went public, which is honestly a huge achievement for the company. Record number of 16 launches in 2024 for their Electron, which I'm assuming is a rocket. 60% increase in launches from 2023, and more than $450 million in newly secured contracts. So that is, moving forward, that is a huge deal for the company. Other than that, they have a new program that they're debuting in 2025, and it looks like just some other pretty solid things. Their their new satellite platform is supposed to also be going into production this year, and that is named Flatellite. So a lot of different applications for that. We're seeing a lot of companies move into the constellation satellite thing, really spearheaded by Starlink, which is Elon Musk's company, but we're seeing a lot of companies move into that. So it will most likely be a fairly large industry in the future. So just some highlights. We already went over some of this. Selected to support a $1.5 billion 5-year federal contract. 5 launches for that company in quarter one 2025. And other than that, there's a few other highlights here. If you'd like to read through everything, feel free to pause. Let's look at the 2025 guidance. So revenue right around 120 million. Gross margins look like they are going to be continuing to improve based on what I saw earlier. And other than that, overall expenses are just about staying the same. Common shares of 458 million, which we will look at in a moment to see how that holds up to everything else. So 458 million, let's head into the financials now and see how that is compared to where we are currently. So starting off with the income statement, actually apparently going to be decreasing significantly in the total shares. However, let's just make sure. So, excluding preferred stock. Now, I don't specifically know if FactSet takes preferred stock into consideration when they do the total shares here. If they don't, that means that they had a share buyback program, which I don't believe they have. So it could just be excluding, or FactSet could be including the preferred stock there. I'm not exactly sure. But anyway, looking into the sales breakdown, you can see their very consistent sales growth over the past 2 years. They've essentially doubled it, or more than doubled it, from 2022, and they've seen a lot of growth over 2024, which is awesome. Operating income is still very negative, although expenses aren't really crazy compared to how much their sales have been growing. I'm sure their margins may have actually improved slightly year over year. But still, operating and net income are very, very negative. And of course, total shares have been consistently increasing every single quarter as well. So moving to the balance sheet, let's see what is going on here. So total assets has now reached well over $1 billion, which is fairly good. One thing I will say is that the company is only worth it is worth 8.5 billion in its market cap. So considering it only has about 1 billion in assets could be a little bit concerning, but hopefully their earnings can start to catch up to the point where that valuation is a bit more sustainable. But for right now, I would say that most of their valuation is based on potential, probably about 80% of it or so. And if that potential ends up having less confidence, if they start losing confidence, their stock price is most likely going to go back down to the lower single digits again. But hopefully they can retain that investor confidence going into the future. So they have 400 million in cash at the moment, just about the same, slightly more in debt. So their debt situation is very good. Right now, no real issues there. I'm sure their debt to equity ratio is going to be pretty high, but compared to how much cash they have, it shouldn't be too much of a concern. Moving into the cash flows. So operating cash flow actually was almost positive for the past quarter. They have had a couple quarters where it was nearly positive. However, they're probably not going to see that be anywhere near consistently positive for at least a couple of years. Looking at the investing activities, it's fairly mixed. There isn't really too much going on here. You can see that gradual stock dilution happening in their financing activities here. They're selling off a fairly decent amount of stock every single quarter. That's mostly just to cash flow the company. I'm not sure why they're even bothering with paying off debt at the moment, but there is a little bit of debt reduction happening. But in my opinion, that's kind of meaningless at this point because they're just selling off their stock either way. So why reduce debt when you're also selling off stock? It doesn't really make too much sense. But we did see at the beginning of the year a fairly large debt issuance. So it could just be kind of a financial policy for the company that they do put a certain amount towards reducing debt, but I'm not really sure exactly. So overall, I would say stock dilution probably needs to slow down. Overall, it's not a crazy amount. Obviously, they have to cash flow themselves somehow, so it is expected. But either way, free cash flow is very negative, and it's been consistently in this range for essentially the past many, many years. But hopefully, like I'm saying, their margins start improving and they can find some kind of consistent revenue. But for most of these companies, it's really just about when will a technology catch up to them, or when will their technology catch up to the point where it can be profitable. I don't think any orbital launch companies are anywhere near making profits or sustaining growth at this point. Basically, every single one of those companies is just in a range where they're selling off their equity in order to cash flow themselves and hoping that they can develop enough to where they are profitable in the near future. And this is one of those examples. I would say Rocket Lab is probably one of the closest companies to achieving some kind of profitability or at least stability. But either way, so we are seeing a lot of improvements. Gross margin has improved every single quarter that is on record here. Up to 2022, they've improved every single quarter. SG&A to sales has been coming down significantly for about the past 5 quarters, which is really solid to see there. Operating margin had a nearly 10% bump quarter over quarter. Looks like same thing with net margin. So overall, there is a lot of progress being made here with the company, but I would guess best case scenario, there's still another year and a half to 2 years where they will not see any kind of profitability. So that's just something to take into consideration as an investor, because that will mean that they dilute probably another 15 to 20% of their stock in that time. And taking that kind of loss in exchange for a slight possibility of them being profitable could be fairly high risk. Other than that, total debt to equity, we did see earlier, they do have a lot of cash to cover their debt. However, one thing to note with that is that they also need that cash as a runway to continue operating. So their debt to equity still could be a significant problem for them, just because almost none of that cash will be used to support their debt situation. Almost all of it is used for operations. So in this case, I would say they still could be in a slightly risky situation, but it's really just, again, can they achieve any kind of profitability in the near future? And in my opinion, Rocket Lab is probably one of the most promising companies to do that. So I would say it is very risky, but definitely has potential. So saying that, that's all I have. Oh, one more thing I want to go through is you can see, and I've been covering this metric fairly often in my reviews. I have a new indicator that shows the growth of their workforce. They have been increasing their workforce by right around 20% per year for the past 3 years, which is, in my opinion, very promising for a lot of companies. So the fact that they're growing their workforce that much means they're seeing a lot of potential in the company. They need to scale up production of a lot of things. A lot more research is being done. So in my opinion, that's a very positive sign. And you can see this company has been doing that aggressively over the past 3 years. So that is something to look forward to. So saying that, that's all I have for Rocket Lab today. Thanks for watching. Make sure to subscribe if you enjoyed, and I'll see everybody in the next video.